Hey everyone, welcome back to the regular viewers. And if you're new, check out that education playlist so that you have a bit of an idea about what I'm talking about. Today we'll look at these charts. It's looking pretty bad. We are in a level where we can bounce. We've hit some pretty high time frame support, but we'll get into that. As far as liquidity goes, we haven't really taken everything on the daily. There's still reason to dip down again, both for BTC and for Sol. So although we can bounce here, entirely possible to do so. Also, wouldn't be surprised if we go down and hit that 119 or 120 level when it comes to Sol, and still really wouldn't be surprised if we wick back down again after maybe a little bit of a bounce. We could always go back down and hit those low 80s, etc. The upside targets that are in play now, we've got liquidity there in the targets, but we have on the daily broken both of our daily ranges on BTC. So, we kind of have to see how daily close happens. If it actually gets back up inside the daily range and closes back up inside through a bit of a pump before close, then we might end up heading back up to that 89.6 target. We have actually got some bigger targets than that are still in play, where the candles close in the next couple of days, and they can take us into the 95s and higher. So, we're in an area where we can bounce. Sentiment's pretty wrecked. It's probably about the right time to bounce. The only thing that's got me a little bit skeptical is just that we haven't actually hit some of the support levels or some of the targets that are lower down. So we may bounce now, we may leave them behind, but yeah, don't be surprised if there's just a little bit of a rally up to get a few more longs chasing and then one final wick to the downside. But we'll have a look at these charts and we can make up our mind from there. So Sol BTC on the daily, depending on how really precise you want to be, it is sitting right now at the hold level. It hasn't quite touched it, and so whether or not we just get a little fake pump up and then maybe it pulls back and then pushes up, don't know, but it is right here at the level right now. So my computer has gone very laggy. Once we hit this 14552 level or anywhere below here, that's where I would sort of expect Sol to get a little bit of strength back into it and move back up. So yeah, it's right there right now, but it is really only guaranteed to be a short-term thing. As you can see, we're going to be hard closing under the break level of the range unless we get back up above 14922 today. And so, even if we do get a bit of a pump off this whole level, it's not necessarily anything more than just a little bit of an inducement. Gets people in, gets them, opening longs again before maybe we take a push back down. The actual origin level for support on the daily is down here at 14213. So if this hold level doesn't hold, then expect to be heading down to there. So that's where we are there. And if we have a quick look at the weekly, we have a weekly origin support level sitting there at 14125. So that could offer a support bounce as well. As it currently stands, we're not in a position to break the weekly downtrend this week. So we could bounce, we could get in a position to break it, but we can't break it this week because we started with the candle on the trend. So it kind of just is what it is. And we have a sort of fractal range trend sitting here in those 143 sort of area as well on the monthly, and we might get a bounce off that, but yeah, at this stage we haven't actually had any real bounce from the body of the monthly candle, and the target for that is still that 16435. So I am expecting we get some kind of pump on Sol, but at this stage it's a case of the closes are pretty bad. closing under that 14956 level on the monthly actually allows that to become resistance. So, we may just bounce from this trend and then just hit that, and then that could be it. It could be over and Sol just keeps going down. At this stage, we haven't hit the monthly break level, so I guess that's kind of positive. But, really, we also haven't broken out of the monthly downtrend because we had a candle that was on it, and then we've just had nothing but down blue candles ever since. There is no real way to guarantee that Sol recovers from where it is, like long term. Particularly now, we basically need an upwards close in December to even break this interior downtrend. And yeah, we don't know whether we're going to get that for a whole 30 days, really. Okay, let's have a look at the safety assets. Now, as you can see, about the worst outcome possible for altcoins on the daily. They pumped that up and hard closed over the top of that origin resistance level yesterday, and then they've just pushed all the way through up to the second level of the range. So we went up and hit that 68.65 area, and we've hit the trend. So now it's a case of, does it break the trend? There's enough of a wick on that candle to safely say that it should close under the trend. But we're also closing above some of these other key levels. So, you really want to see a pullback prior to the close of the day, just to make sure that you're back under things like that. What level do we have there on the daily? We have a 68.42. You really want to be under that at a minimum, just so that you can take a rejection off the back of that and start to travel down. Closing above that is very bearish, for altcoins. Okay, so the weekly close. Overall, the weekly close really wasn't such a bad close, but as you can see, what's happened is it's pushed up immediately after the open of it, and it's got a week, so it can keep pushing through. It can try and hit these trends. We could have, more downside, etc. But if it does start to reject, off the 68.5 sort of area, then what it's going to do is it'll end up traveling back to that trend. That will be your alt pump that you'll get. But once it hits that trend, the chances that it will just bounce off the first touch of that trend is pretty high. And that's about where your alts will just roll over again and start to head back down. So, if we have a pump, it's quite possibly just going to be a fake pump. That's all that's really saying. And the monthly opened in a position of nothing. It's basically on the interior trend. It is on the right side for the next month to be able to make a difference, but I wouldn't expect this is really going to do much unless it goes up and either hits the 68.92 and maybe then rejects off that, or it's just going to be controlled by the lower time frames ultimately, where maybe they have a rejection and the monthly starts to pull down. It's really just a nothing. It's really just a nothing place. Okay, let's have a look at these totals. Yeah, so that's a very, very, very bearish candle, if you've ever seen one. So what ended up happening was they lost the trend. Right? So they closed the candle, shifted the trend, opened on the wrong side of the trend, and then it just dumped. Now, the dump is big. Like, they went straight through a daily hold level here. They've gone straight through another daily hold level here. They've broken 2 break levels, and they've targeted the trend and a retest of the range trend. So as for, does it bounce from this point? It can, but you need really about 2 more days for this thing to either establish a origin off one of these break levels, or it's going to close under one of these break levels and then just continue to the downside. So those are the outcomes. You don't really know which way it's going to go for at least another 2 days. The hold level, I think, just double check whether that bottom hold level has had its bounce. I think it may have. So we'll just check. Let's see. Yeah. Yeah, so the minimum obligation for that hold level was just to have a little bit of a bullish bounce from the 1 to the 1618, which was performed in those 3 hourly candles there. So there's no obligation for that to hold the price up anymore. It's basically done its thing. If you were trading at that point, that's when things looked a little bit rosier for 3 hours, and then obviously it just rolled over and continued down. As for what comes next, you're not going to know for 3 days, basically. If it is more positive if it closes up over the 2.59 trillion, because that sort of means it's not trying to invert the hold level into resistance. But again, nothing's been hard closed, so the trend will disappear today, this particular trend to the upside, which has been broken. Now that we've tapped the bottom trend, it is positive that it hasn't lost the bottom trend or closed underneath it. But we do have 3 hours to go, and you saw what happened in a matter of less than 3 hours. I think they really started to take a hatchet to it in the last hour of the day. So you can kind of see how quickly this stuff can flip from bullish to bearish, from no decision to absolute chaos. So yeah, there's not much else there on the daily. So if we have a look at the weekly. Okay, so the weekly is sitting on a range level. It's pushed through a trend. It'd be reasonable to say that the weekly could have a bounce back up. It hasn't really rejected off the range trend. So it's more of a daily breakdown than a weekly breakdown, this whole thing. So it's that could have a little bit of a bounce. 2.58, you wouldn't expect it to do anything more than travel back up to 2.82, but it's kind of already done that. So that this week here back in the 17th of November was sort of when it hit the range level and then travel back up. So the obligation to make that move is kind of already done. There isn't really much here to say that the weekly has to go back up or repeat the move. If it was to go lower, now really it's got a down sloping range trend it could find support on, which would be a new range trend, and that's back down. It's basically a lower low, from where we have been before on the total market cap. If we look at the monthly's created a range trend. It could travel back towards that. It's just got too many. It's got too much time on the candle, which is what's really tricky about it. So there is a range move which could play out, but it already sort of did play out back in March. So we say could. It doesn't have to. It could bounce from the 2.5 and head back up to the 3.15, which would be a pretty bullish move. But pretty much everything on the total market cap on the monthly that should play out has played out. The monthly control candle has done its bounce. The 1.618 level has done its bounce. Yeah, all you've really got left now is a range trend, which could send it back up, but really doesn't have to. So if we look at just the risk asset part of this, the whole candle it's gone straight through the whole candles. It's just double check whether that had its bounce. Let's see. So we're looking for a 1 to a 1618. Should just clear all that. So all we're doing is we're just chucking the fib on here, putting a horizontal line on this daily candle so that we can see when the candle actually opened, and then we're dropping down to a lower time frame and checking to see if we had our bounce. So in this case, we didn't have the bounce. So that's positive that there might be a little bit of an alt pump, back up to this 908.24. It is still a pending move on a daily time frame. It doesn't, I don't think that was daily, wasn't it? Yeah. Okay. So the thing that can stop this is this level 1 here, which is the 892.57 billion. If we do close below that today, then that can become an inverted level. It can become resistance, and it can stop this from actually getting back up and hitting that 908. So it's a pending move, but it's a pending move that may get stuck with resistance. We also have, we're below a daily origin level from the looks of it as well. So that was, yeah, we're also below that daily origin level, which means if we close down here, we may just continue to break down further. Next level to be tested would be the 863. And then the next and final origin support level would be 853. And then we move into a whole candle for the entire market of altcoins, which is basically down there at 835. So, yeah, we can bounce here, but it's a pretty bearish looking chart, to be fair. It would be a lot better if the bounce came before close than the ramifications of actually closing down here. Okay, looking at the weekly, there's really nothing to be said for the weekly. It met its minimum. Yeah, actually, it kind of didn't. It just slightly fell short of its minimum, just by a tiny amount, which is interesting. So yeah, maybe there's going to be that little alt resurgence based on that. Right, let's have a look at Sol. Okay, so first what I want to do is I'm going to show you some pretty scary stuff. Okay, so this is from months and months ago, and it just sort of shows you how long these things can take to play out. Right, so I'll give you a couple examples going on here. So we had a hold level that had never been touched, and I cover this in the education series. We had this hold level from 2021 on the monthly. It had never been touched. We hit it in 2024, and we had an instant reaction. So that was one way these things can happen. They can just play out straight away. Right? A lot of it is just purely based on liquidity. It's based on whether it's going to be easy to send the price down, or which is easy if there's lots of liquidations and stop losses to be triggered and all that kind of stuff. And if there isn't, because everyone is bearish, then it won't go down quickly. Then you can have times like this. Okay, so this is from January, engulfed by February this year. And as you can see, we spent, by the time we triggered it, which was July, so July, August, September, October, and really it was this month here when we opened November that we opened back under that, that hold level. Now, when we open back under that hold level, down we go, and we have now hit that 123 target. And so it's had a bit of a bounce there. The thing is, it is a target. It is not a support, right? So that's kind of why I say there's no actual reason to bounce here. What we do have is we have got a 1 month origin level sitting here at 120.487. Now that can get tested by the candle, and that can offer support, and it can send the price back up. Now, the tough thing about it is, where have we closed? So we've closed under the monthly break level, which means really it only has to send the price back up to about 144. That doesn't actually, it doesn't really help a lot of people who want to see Sol go to some really, really high price. It could be more bullish, and it could come up as high as the hold level up here. So if we take the most bearish part of the whole candle, which is the wick, then that would be sort of targeting back up here at about 190. It may just go back to the hold level of the prior candle, which is about that 189. Or there could be some kind of origin resistance level or something that is coming through here. There is a 6 month break level at about 179, which which it could hit and just reject off that and never really make it to these targets. So you know, there's a lot of things that could happen. But also, you know, if we look at this from, say, the most bearish perspective, it's got 30 days left to go on the candle. Much like it wicked through this level here and went from, you know, 124 all the way down to 95, there's no reason why this just can't keep on going down, you know, and it could do it for 30 days. You could have the worst December known to man, and then towards the end of it, you know, everyone starts chirping about Santa rallies, and the price comes back up because it's just retracing to then bounce off the first touch of this monthly level. So that is, you know, realistically where we're at. Now, if we have a look at a bigger picture, okay, so this is the 2-month. Now, the 2-month actually played out in this candle right here. So we had a hold level here, which was targeting a minimum rejection of 109. When we hit, just show you what that looks like on a lower time frame. So if we put that on there and check out the daily, okay, what you can see if we scroll all the way back here is the magic of our, I think we called that the Trump pump dump or whatever back in the days, but pretty much it was a close below a 2-month hold level. We went up, we smacked into the one, and then we found our way down here to the minimum target. All right, so that has played out. So we don't need to actually consider the 2-month anymore as having any real obligation. So that's a good thing. What we do have is we have got a 2-month support, which is probably exactly the same level, yes it is, as the 1-month. Okay, so we do have reason to bounce there, but once again we have 30 days to go on the candle, so it could you know, keep on going down. There is no hold level, you know, for this time frame. So as far as the bounce goes, and this could be a very bullish scenario, there is a origin level up there which could be tested. The most bullish thing that Sol could do out of everything that's on the table is bounce off this 120 level and head to this 259 level. Okay, that's the most bullish thing. But you all knew there was a but coming, right? What have we got over here on the 3-month? Well, we have this, and this has not played out, and so it's still pending, and it's down to $83. If we do not bounce or get back above this 152 level in December, it is probably going to go to $83 if it doesn't already do it. You know, so it is a pending move. It's a valid move. The chances of this playing out are really, really high. We don't have to worry about the older one back here, right? Because realistically, it already played out just on this candle here as part of the bear market. But this one is still pending. Okay. Now, what do we have here? Well, 109.417 is going to be a level that could bounce it back up. But once again, we've got 30 days to go. So it might work all the way down, hit this $83 target before it even bothers to retrace back up, you know, and then maybe come back up to the hold level. It doesn't really have to, it all depends on how it closes. It doesn't really have any obligation to go higher than 144.7 if it closes down in December. Now, if it doesn't close down in December and it gets back up, then it's going to go and try and find some higher target, which could be, you know, a retest of this break level, which hasn't been closed yet. Okay, so we've never managed to close a candle properly over that break level, and you know that takes it maybe up to 179, right? So you know you've got targets here at $83, and you've got maybe possible bounces depending on how the thing closes up to, you know, 179. And then if we look at 6-month, okay, you have to come back and have a look at this older one. So 6-month has played out. So we went into the 6-month, we came back down, we hit the 98. So that's job done. So we probably don't have to think too much about the 6-month. I think I've actually missed one here, but we do have a trend. Okay, so this is interesting. And looking at the 6-month chart, doesn't look like we've touched the trend, but fractally, if we then look at it from a daily perspective, you can see we're actually on the trend. Okay, so this 6-month level of that 144.7 rejection, you can see how that's pretty much played out daily. So this is kind of what this is played out perfectly. This is kind of what we call polarity. It's where a level that shouldn't be resistance is already behaving as if it is, right? So this is very bearish, right? For an unclosed level to be rejecting the price down to a target when we haven't closed any of this stuff yet is very, very bearish. Now, as for what could happen, well, bullish scenario is that this trend actually bounces and bounces somewhere in the next 30 days and comes up here to target that break level, at that 179. So this is basically the most bullish thing that could happen. And now for the one that no one is going to want to see. But this is the 4-month. Okay. Now it has played out based on the older structure. We've got a 4-month close coming up where it could, end up closing down. And that means that we have this 147 down to this 103. We might go to the 103 first, bounce back to the 147, then down again. Sometimes it just zigzags like that, goes up and down. So that's another close coming up. And there is one that I think might be this one. Oops. No, that was at 83. Was it 6-month, 12-month? Just see if we can find this thing. Yeah, 12-month has played out. Right. Took me a while to find that. But this is the one. Now, this is the Binance chart. And Binance has got a wee bit more history on it than BitGet, which is what I typically use. And this is realistically a close below 108.27 could lead to $14.56. Okay. And I know that is absolutely not what people want to hear. But hey, it's a high probability move. If we do not bounce in December, then you have to know that that is potentially where the bear market will go. All right, so now that we have got that out of the way, let's have a look at the actual closes we've got coming up. So one day is actually sitting on an origin level. As you can see, the bounce has really been kind of nothing so far. We have a trend just below it at about 122. But overall, it looks like the sell pressure that is being poured in right now, they're probably trying to keep this candle from actually moving up. Now, if it doesn't move up before the end of the day, then it's going to have a trend to reject off, a range trend to reject off, a broken break level to reject off, the hold level is already broken. And basically, the only way they could make this any worse would be to actually push it down and close it under that sort of 123 by the end of the day. If they do that, it's going to be good old insta-dump again. It is possible for this to close badly, dip down, hit one of those higher time frame levels in the 120s, and then come back up. And so one of the things I sort of was looking at when it comes to, what could they be trying to do here, was looking at the size of this candle and saying to myself, could this create a range? So the thing that I find very interesting about the exact size of this candle, if I go wick to wick about range creation, is I get this level here at 161.5, which is basically the hold up here. the fair value gap and the hold. I get this level at 172, which is these origin levels up here at the top of all of this distribution. And if this is going to turn bullish, maybe what will happen is today they keep this depressed, they keep it down here, they keep it under all the daily resistance, they don't touch the higher time frame support, and then they wick down, they tap it tomorrow, they push back up, they fully engulf this, they get over the 140s, and then it starts to range to the upside. Okay, so that is possible. That could happen. It's all crystal ball stuff because obviously there are no candles here yet, but it looks like something they could do because this trend would be getting erased today because it's getting broken. Now the other thing that could happen is there's so much size to this candle, and the body doesn't really matter. Like when you're looking at ranges, the body just doesn't matter. So they could, and this would be more bullish for the future, let that origin level kick in, get back up inside the range, get back up on top of the trend, then potentially, wick down, take out those longs that have chased it, and then have a fast recovery, right? The next daily candle could engulf this because, like I say, it doesn't matter. Body doesn't really matter when it comes to, the creation of a range. It can have a long wick on the bottom. Next one can wick down below, tag the levels again, hit the higher time frame stuff, and then bounce, and then create, these various levels to the upside. So that would be very bullish crystal ball gazing stuff. Technically, the interior trend is going to shift to the bottom. It's going to move to here. So having not touched that exterior trend gives you this condensed arrayed trends, and that also is typical of a breakout, a big bounce, a reversal, or unfortunately, if they close underneath, it's a violent breakdown, right? So it's basically it increases volume. The more trends you have lined up in exactly the same place, when they get broken or bounced off one way or the other, there's increased volume. So yeah, that's what we're seeing on the daily. Now, if we look at the 5-day, there is a 5-day hold sitting down here at the 120.262. So it's going to be a little bit tricky to tell whether or not we are bouncing off the monthly origins or whether we are actually bouncing off that. So what I don't like about the 5-day close here, and there's not that many closes today, but the thing I don't like about it is they're basically putting the candle back under the trend. Now, if they pull it back up a little bit and then hit it, it's got a pretty good chance of moving from 120 up to 135. But if they close down under the trend, then what might end up happening is they might just hit the hold level and then whack into the trend and then basically keep pushing down and break the trends. Break the hold level. So it's bothered me for a few days now, or a couple of weeks now, that it didn't actually hit this level, and they sort of left it behind. And the outcome of hitting this level can be bullish or bearish depending on today's close and where today closes. So if we close anything under 128 for the day, we're creating another resistance hold, and that means you're going to have this one thing trying to push down to 118, and you're going to have another thing trying to push up from 120, and you're going to have two trends that are going to be aiding the thing pushing down. So you really want to, if they are going to try and flip that and make that bullish, you want to see them close it over the 128.573 today. Also, just jumping back a sec, there is a daily hold level all the way back here, which is about 119, which could give a move back to 125. So it's not a huge move. It looks like that one would be more likely to play out if it gets hit, just simply because the trend, as long as they do it quick enough, the price will have approached it from the top side of resistance. So therefore, hitting it should get it back up above the resistance. Unfortunately, it'll probably just hit the trend again, and that could be the end of it. So it may only go from 119 to 125. Yeah, that's it. Okay. Now, just quickly look at the 67-day close. So 67-day close is capable of creating a range. It's fully engulfed, everything, including the wick. If it was to move back up, it could go as high as 155. It could come back up to the body. That would be 181. The issue is that the trend, when it moves today, is going to move there. The price would likely open on the wrong side of the trend. That means that 129 could then give a rejection down to 95, 76, or 52. Right, so that's that thing is pretty much a doomsday candle if they choose to close here. To make it any better, it's really got to get back up above the trend, so closing over the 130s today to be back above that trend, and then it could introduce a bounce. So, bullish or bearish is all just really depending on the close. Now, if we look at the weekly, so the weekly has opened. It technically on some exchanges this opened just under the resistance, on others it opened just above it. It's pushed down, it's hit the relocated trend. Issue is it's got 6 days to make a choice here. It can keep going through here and then bounce. It could bounce just off the trend. If they hold the price down here long enough, then the hold level at 130 or 127 becomes resistance, and then that basically stops it from being able to bounce. But it all really depends on, whether they let this thing actually go up. And as it currently stands, this is why there is just huge amounts of sell pressure. It's just keeping the price, stuck in positions where, unfortunately, it can get more bearish. Okay, I think there is some big Powell speech coming up in about 4 hours too, so it'll be interesting to see if all of this is really just going to suddenly moon. So if this was a bullish market, bouncing off this trend before this hold level is confirmed would get you back to a minimum of about 141, which is basically a broken level, and nothing else under there is hard closed, until you get to that 141 level. And if it got back over the 141 level, it would travel up to the range trend, which is your 147. If they decided to wick up into the broken range, then they would just wick up there anyway, tag that, and then potentially reject. And if it was a really bullish market, trends target holds, which means that this would be returning all the way up here into the 170s. So, if some catalyst comes out and this thing flips bullish in the next week, those are where it will be heading. Okay. And then looking at the monthly, well, the monthly's got no reason, so we've already kind of looked at the monthly, but the monthly's really got no reason to be hanging around here. If it tags this level at 120, maybe wicks through the 120 level to hit the trend, which is that's kind of high probability that it goes down to that 110-ish sort of area. And then it should bounce back to 144.7 at a minimum. Now, 144.7 as far as monthly timeframes go is not a hard closed level. The trends are not hard closed, and so they're up in the 150s. The hold level up there in the 190s is hard closed. Right, so that's pretty much what we're playing with. We're playing with Sol that has got fib shorts in play to take it down to 103, 80, 80-ish levels all the way down to $14. And at the same time, it depends on how much they just want to keep pushing it down or whether they want to have a rally. And if they are going to have any kind of rally, it's got to come off one of these levels really to give it any kind of bounce to the upside. If they don't bounce in December and they close under this 120 level, then there's really, I'd say that they're just going to go on a rampage and head down to those lower levels. Right, let's have a look at BTC. Okay, so like with Sol, we'll go over this really high time frame stuff on BTC, and what you'll notice is it is very different. Okay, so firstly you had this monthly dump, and that was met in this candle right here, so that is obligation done. Now there's no other proper monthly engulfments in any of this, so there isn't really any obligation to be going down right now. It is just going down, and it's mostly because it's hit the top of a range, and therefore it's doing its rejection, which is this range here. So we got up to 126, we're coming back down. And so all we've really got to work with here is range levels. Now, because we've closed under this 92, and that was that thing. Like as soon as we closed under that 92, every algo in the world just went, we just closed a monthly candle below the middle of the range, dump. Like we are danger, 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 risk off, and it's just, heading down. Now, it could head down to the 75, 76K area. That's definitely possible. It might simply be that, people buy this thing back up and we get back up over the top of the 92 and continue up. That's possible. If we close up over 92 next month, then likewise all the algos are going to go, hey, we've got the half of the range back again, and we're going to buy again. So, they'll go back to being risk on. Or realistically, it's going to come all the way down into the 60s, right? So that just is what it is. That's kind of how the range works. So if we try to get any other indications, if we look at like 2-month, there's no short pending on the 2-month, but as you can see there, a 2-month close below 108, there definitely will be, one, because of this engulfment, and that will create a move potentially back up to do the test, and that could be your rally. We might come back up, we might test those levels and then dump again from there. We could look at the 3-month. So 3-month has a support level here, which should take us back to 104. We haven't broken the 3-month structure, we're just down inside of it. When this closes, if it ends up that December closes down inside this, then it may just flip this 93,570 into resistance. We may never see that higher level again, or we come back up and then we can bounce from there. Okay, so that's another option. We've got 30 days for that to become either bullish or bearish. And if we look at the 4-month, okay, so 4-month, this would be potentially a 75K target if we close the end of the year under 94. So that's pretty bearish, but 30 days to get back above 94. Okay, if we look at 6-month. The 6-month structure would be a little different because it wouldn't be fully engulfing the wick unless it gets down below 74-ish before the end of the month. So it'd have to get below 74 before the end of the month. So you probably wouldn't look at that as a level. You'd look at one of those other ones. But yeah, so BTC actually kind of hasn't made up its mind yet. It hasn't had the same bag closes that altcoins have had, and it's potentially going to have a bit of a push up, which then makes you actually ask the question of if BTC, even if BTC closes, let's say doesn't close all that well for December, it still actually could then have a rally, and that would then push up those altcoins a little bit along with it. But so that's kind of the higher time frame for BTC. Now if we check out the actual closes happening now, so all of the obligations for this lower hold have played out. So I've checked inside that candle. So the 1-day move, which took it back up to the 86.091, that's already happened. We're bouncing off a range trend, an origin level, a break level. If it closes back up into the broken range, back up inside the 86,266 by the end of the day, then it might have a go, to actually try and meet the obligations of this upper hold, or it may just come up to the upper hold, which is about 88.2, and then just reject from that sort of level. So that's possible. But really, to get this thing into bullish mode, it needs to get out of this downtrend, and to do that, it needs to close probably over 86,600 would be on the top side of both the broken break level. It'll be on the top side of the trend again, and then you need one more day. Okay, and if you don't get that one day of engulfment on this candle, well, it's probably not going to keep going up. So let's have a look at this candle and just see if it means anything. And it does. So 107 is a high time frame resistance. It's a high time frame target. 101 is the backside of the broken range to be retested. 94 means that it has to get out of this origin level. So both the Sol candle on the daily and the Bitcoin candle on the daily are capable of being control candles for ranges that could kick off a retrace. But it needs to happen with tomorrow's candle engulfing to the upside. Okay, so that's kind of where that's at. Now, it hasn't technically bounced off. Actually, it has. Yeah, and it has bounced off an origin. Okay, so we have the things we need to create a range here. We've hit an origin level. We've created a distribution. Well, it is a distribution candle that has the right physical size to create a range that have relevant levels to resistance across what would become the backside of the range. What we need is one more step, and that step is we need to engulf it. And if we do engulf it, then you're looking at the kickoff of a rally. Okay, so that's where we're at. If you don't engulf it, it ain't this candle, and it's just going to be more downside. Okay, so now the 5-day level on BTC doesn't have a hold level like what it does on Sol. And it does have an origin level, which we have bounced off. We never engulfed the candle, so that's, the next 5-day period wasn't enough to engulf the candle, so it wasn't able to create any kind of range. We've come down now, we've hit the range trend, and as long as we close BTC higher than 85,807, it's not creating any kind of hold level. All right, so that currently is looking okay to be not as bearish as what it could be. There's nothing else in there as far as structure that's all that relevant. It is breaking the trend today, and that will shift to the bottom of the candle. That's about it. Okay. Looking at all these alerts going off. Just had a 4-hour close. Okay. Looking at the other close today, which is the 67-day. Okay, so this is not, I don't think this has met its, no, so this has not met its minimum obligation to bounce. It could be converting 93,570 into resistance. It hasn't actually hit the trend, which means it would have to go back down again. So, maybe it pushes back down to 81 tomorrow. It hasn't hit the break level, so that's positive. It's still technically got the range. Break level would be about that 74 mark. There's going to be sort of a hold candle at about 98 on the backside there through to about 103. And it's got a break level up there at 108, which is not technically an origin level. It's breaking trend today. That trend is condensing here, so that gives it an option to wick through both trends and have more of a push to the upside. The close is technically above both trends, as long as it closes here and doesn't go down anymore. So yeah, it is a possible bounce, off that close. Okay, looking at the weekly, it's not really telling us anything other than we're stuck under trend, stuck under range trend. So BTC weekly has not met its obligation to bounce back to that 95 537. So it could happen anytime in this sort of week or even next week, but it's hard to say. The range origin for this is 76.562. So if it taps that, then it's basically testing the entire range to see if it can break the bottom of it. It should bounce, given that it's a weekly test of an origin level, but and that's kind of what we've got. This origin level up here, we've got another one in here. So if it does bounce bullishly off any of these lower levels, the targets are pretty good levels to the upside, but it's got to bounce. And monthly, we haven't quite hit the monthly trend looking at that, but I'll just check that out fractally, see if we've actually hit that on the daily. No, so it's down here at about 81. So we did technically hit it on that bounce, that candle there, but we haven't revisited it since the close of the month. So we've also got a range trend down here at about 81. And don't think there's much else to look at in there. So, what's happening on the monthly really is nothing because there's 30 days to go. What's happening on those other time frames could start a bounce, but it looks to me like it would probably still wick down to at least sort of like a double bottom or something like that before it actually creates that bounce. And you really want to see this close up as high as possible today, even if it's only going to give you a bounce back to like that 93,570, which has been a key level for quite a while now. If it gets sold down before the end of the day and opens under the new trend, and that means very close to where we are now, it really only has to be at about 85 to be under that trend. Then it's probably going to try and use the backside of the trend to keep going down and break the break level, which is very, very bearish. And then your next hold is going to kick in somewhere between 70 and 66, which is, I think that would be enough to get fear and greed down to 0. All right, so that's us for those. Let's have a quick look at Tesla and MicroStrategy. Okay, so Tesla on the daily is still struggling with the trend, and it's also pushing into the hold level. If it can't get to this 442.33 level, which is the break level of that distribution range, then it's probably just going to ladder off this and head down. You're really certainly an area where it would be sensible to take a bit of profit if you're in profit. and you could always re-enter if it breaks the break level and retest the break level, but yeah, it's unless it gets back up over that 44.2.33, then it could just be a downwards ladder. So this is effectively like, say, this yellow candle here. So you have your hold, this ladder's off the hold. This is now looking to potentially ladder off the hold. And if it does ladder off the hold, it's going to come down to test this, which is the ladder in the other direction. And if this doesn't hold, then it's going to be coming down to test this. So that gets you back into that sort of 350-ish area. So yeah, it's definitely, it would have been nice to see it open on the top side of the trend and then use the trend to try and break through the hold. But yeah, it's rejecting off the most bearish part being the wick at the moment. On the weekly, so the weekly is pushing into the hold. So the weekly looks a little bit more bullish, but it's still got 6 days to go. So same sort of thing. It's really just this level, which is about that 434.72, which is going to be wanting to fight with this level, which is about 406. Yeah, so it's too early to really tell what that weekly is going to do, but if it hard closes the trend, so yellow candle on the weekly above this range trend and downtrend, it's kind of both, then yeah, it should actually be able to travel up to try and break the break. But to break the weekly break, it's got to get back up over 473 and then 477 to break out of the weekly downtrend. So it's a bit early to tell. I imagine MicroStrategy has probably had a absolute beating. Let's have a look. Yeah, still just where it is. So it's still just in the 3-month support. Hasn't lost it. It has gone down and wicked a bit lower into it, so it's gone down to what, 156, and then it's moving back up. So there's, let's see if we got, yeah, so what did that go down to? So it retested the weekly origin, which is the 3-month level. It's bouncing. What's that? Yeah, they're kind of one and the same, actually. It hasn't retested this break level down here yet, though. 152.35. So if it was to take another dip, you'd expect it to sort of go down there. But it could bounce from here. So it's the level itself is going to want to come up to this 219, but yeah, it hasn't done a retest of that 152, so that's very possible. And then we've got the weekly origin. It's kind of a couple of them, actually. There's one at about 125, and there's one at 120, would sort of be the next levels that it could go to if it continues to the downside. If it loses this area, then it's just, really down. It's going to go really, really, really down. You've got like a weekly hold level down here at $73, which is tiny, may not really support it at all. So just double check, see if there's anything on the bigger 2-month. Oh yeah, 2 months has got a pretty clean level. So you might, what's that? 141 on the 2-month. And you got a retest of an origin there at 88 on the 2-month. Really don't like the look of this chart, eh? It just looks like it's just looks like it can take an absolute dump. See, retesting levels like this 88 level, is just so normal. It just happens more often than not. And anyone who's followed this for a while, you know, this is where we turn around and we go, hey, we just retested all of those levels on Bitcoin and Sol. You know, it's just happened. MicroStrategy hasn't done it yet. So there's definitely room for MicroStrategy to just simply do these things that would be normal retests of normal structure, and they'd be sub $100, you know, to do that. So yeah, that's but yeah, would it do it in a straight line? Probably not. It would bounce, you know, on its way down off various levels, but yeah. But yeah, that's very, very, very bearish looking chart. So, and it's pretty much done all it needs to do as far as 3 months goes. It's hit the range top. Like if it was to bounce from here, you know, back to 50% of the range would be about 292. I really wouldn't expect any more than that on the high time frame. And yeah, it could start December, it could start next year. Yeah, so it may be down here for a while. It's just too hard to tell. So it's not a bad area if you have conviction in it to start to DCA back in, but it's if you'd sold out up at these higher levels. But yeah, at the same time, just don't be surprised if you open up your profile one day and you see that it's gone from 171 down to 88. All right, that's us. Hopefully you got something out of that. Let's see how they close today, whether they close bullish, bearish, or medium, showing some kind of intent for what comes next. All right, catch you later.